You are buying Returnly, which is a player in online returns, post-purchase payments. Why does this deal make sense for Affirm? Why did you want to do this?
So a little bit of history first and foremost. We actually invested in Returnly a couple of years back. So we'd always known we wanted to have something to say in the space of returns. Returns are a thing, and it's kind of the other side of the transaction. You're excited, you want to buy, you're a little uncomfortable, you worry about using your credit card. Affirm to the rescue. That's what we built our business on, still growing really well. And what happens when you suddenly realize the shoe doesn't fit, the t-shirt is the wrong color, whatever the reason, when you want to return something, it's sort of the moment of dread where you're like, oh man, I have to print the label, put it in a box, and then one day they'll restock it and I'll get my store credit, and then maybe I'll still want it. And so it's terrible for consumers, and merchants hate it because that one moment where you're like, I love that t-shirt, except the color is slightly not what I want. I want the other one, but I'm not going to buy until I get store credit. And so what Returnly does is they just completely eliminate the pain of returns by shortening the experience to, oh, you want to return? Great. Click this button. You will get your store credit upfront right now. You can pick the right color, the right size, and then at your convenience, put it in a box and ship the item that you don't want back. And so just flipping the order of happy replacement now, dealing with a pain later, they really have just created a delightful experience. They served over 8 million people and $1 billion plus of transactions. And so it's almost the natural complement to what we've done on the payment side to deliver on the return side.
So you've been a public company now for a few months. How does this fit into your bigger vision of what you want Affirm to be as the economy starts to reopen and slowly and hopefully we come out of this pandemic?
So we always said that we want to deliver value to our merchant partners everywhere we can. So this is another example, another spot where we can do this, and we're just delivering on that. Being a public company has some niceties to it. You have a currency you can use to purchase things, and so acquisitions is now part of our toolbox, and this is a fine example of where we think what we can do to further our mission. It also really is great that this is such a delightful consumer experience, and I think buyer's remorse is alive and well, and we're going to make a lot of people a little bit happier, and I think that will help our mission to bring these financial products to people and improve their lives. It doesn't hurt that the economy is finally reopening and the pandemic is hopefully receding, if slowly, and there'll be many more purchasing and returns will come with it. And so all these things fit together nicely.
So looking ahead, what trends do you expect to see in consumer spend as the economy starts to reopen, knowing that many customers have been struggling financially, but also maybe it's time to throw that wedding or travel? I know Vrbo is one of your new merchants, or go out to restaurants.
So you've nailed a couple of these really well. I think none of these are secret, but they're kind of fun and in some cases a little bit surprising just in their sheer scale. So 96% of people who are supposed to get married in 2020 canceled their wedding plans, but they didn't cancel, they moved them. Only 7% of the couples actually fell apart and didn't get married. It's very sad, but 96% are pent-up demand for weddings. So can't lock down love. There'll be lots and lots of weddings, and I can't say that with actual. I am no Kanye, but that's going to be a huge area, and we're seeing that in demand among our merchant partners. Fashion and travel are going to intersect. Expect more suits in airports, fewer sweatpants. I think that's a pretty important one. I don't know if it's going to be 100% true, but the sort of Thanksgiving rush is going to repeat itself probably almost every weekend over the summer because people are dying to get out. In our surveys, 7 out of 10 people that we surveyed are planning to spend significantly more in travel. Obviously, we always ask them, how do you plan to afford this? And they look to us for that. But everyone, or 7 out of 10 anyway, are increasing their travel budget. I'm oft quoted at this point. I've run the entire IPO roadshow process while wearing shorts. I intend to put on some pants eventually this year, and so I think that's going to be a trend. In fact, I'm not the only one that hasn't seen have seen too much of my own needs for a while. So there'll be lots of fashion purchasing, we think. Connected fitness actually is one where I think is a trend that isn't going to subside vis-a-vis pandemic. I think the natural sort of first order effect as well, finally we go back to the gym. Hey, why not? I think one of the things that we learned is that sweating next to another person you've never met, but who's kind of, maybe spraying a little bit too close to you is not a thing you have to do. And so we see demand in connected fitness continuing. About half of the consumers we surveyed in our user base said that they expect to spend more in connected fitness in 21 than they did in 20. And so I think the sort of getting that extra cool workout equipment at home is going to be pretty powerful.
Well, and I know that Peloton is one of your big merchants. We just had John Foley, the CEO, on the show. There was a big, kind of dire warning about their treadmill. Does that at all concern you?
I think from the point of view of making sure that they are compliant with all the regulator demands and sort of answer to their consumers as they're being asked to speak to safety of the products, of course. I think from certainly my point of view, the products they make are fantastic and they are selling them very well, and we're there to help them with that. But obviously, you have to make sure you address all the safety concerns. So it's something that I'm quite confident John is working on very hard.
Now, something else that consumers, at least a subset of consumers, are embracing is crypto. Your PayPal co-founders, Elon Musk, has invested $1.5 billion in Bitcoin. He's accepting Bitcoin as a form of payment for Tesla. Meantime, Peter Thiel has said China could use it as a financial weapon. What's your take? And will Affirm start letting users pay in Bitcoin?
One of the downsides of being a financial services company that's publicly traded is that I can't really say anything anymore about what we're going to do. Everything's on the record, but it's, I've been frequently portrayed or named as one of the crypto skeptics. And so I think you can consider this something of a thawing on my part, where I'm very actively looking at the opportunities in the space in a big way, because I think, through sort of wandering through the desert for as many years as it has, Bitcoin has finally, and cryptocurrencies writ large, have finally crossed over into the true popular conscious. At this point, wealth advisors and registered investment professionals are telling their clients, hey, maybe you should put X% of your personal net worth into crypto. That sort of tips it into the gen pop. And so I think the ship has finally sailed. We have to consider what that means for us. That said, I think the macroeconomic geopolitical implication is probably far more interesting and far more important. I think, I've said it before and I'll say it again, I think the real risk to the US dominance internationally, one of the real risks is the possibility that someone else builds a truly digital currency and that becomes the reserve currency of the world. US dollar should be fully digitized. It should become the digital reserve currency of the world. And so I'm very pro Fed's explorations in the space. I wish they would move very quickly. I think there's a lot of us in Silicon Valley who would love to raise our hands and say, hey, we're interested in helping out. And I'm sure people who have been long pro crypto are more qualified than I am, but for what it's worth, I'm excited to pound the table for that.
It's worth a lot, Max. I know everyone wants to know how your thoughts are evolving. The most bullish analysts on Affirm are excited about you disrupting the credit card industry. Apple just unveiled some new features of its Apple Card. Curious if you have a reaction to that and how you think the credit card industry plays out as we enter a sort of new chapter in how consumers are paying for things.
I think the most important trend, and I'd like to believe we contributed to it. I'm sure we didn't start it, but I think we're one of the loudest participants, if not the most successful one, is this overall push for transparency and elimination of fees. I think Apple, to their credit, long before the current set of announcements, have basically said, look, we're not going to charge late fees. And we were there a little bit earlier, but they certainly have a giant spotlight on them. And so it's very exciting to see a major credit card creator provider say late fees are not a thing we want to profit from. And this idea of aligning your financial interests, in our case with both merchants and consumers, is a profoundly important trend. I think that's going to have a lot more impact on consumer financial health than just about anything else. nothing is better than saying, when you succeed, we succeed, and when you can't pay, we're not going to kick you while you're down. So I think that's the most important thing. And frankly, if the totality of credit cards out there, whatever I think of them, say, hey, you know what, we get it. We should get out of the late fee business, of the deferred interest business, of all the things that you're not supposed to read in the fine print. If that goes, great. I'm excited to see that financial future, and I'm prepared to compete in it. The way we compete, the way we sort of answer all the various announcements and competitors and the like, we are fundamentally a technology company. We differentiate ourselves by building cool, new, unexpected things that are scalable and more interesting and more technically fun, frankly, than anybody else. And so all of our announcements are always going to be focused on technological improvements and incremental gains that way. And Returnly, so to go back to the very beginning, is one of those things. It's a really neat technical solution to a very gnarly emotional problem. I don't like this thing, but I'm not, and now it doesn't have to happen that way anymore. And so I think that's sort of the thread on which we continue to pull.